Okay, hey everyone, just a quick sound check and then we'll get started with our news trading session tonight, which is going to be our theory and practice. And obviously a lot goes into how we understand, the theory behind news trading, so we can kind of fully utilize what we're looking out for, things to avoid and whatnot. All right, audio seems to be coming through okay from my side. Do let me know if there's any issues and we'll get started, okay? All right, my name is Straddle. We'll get started with our theory and practice session tonight. There's a lot to cover and there's a lot of, examples that goes on in the market as well that we can kind of employ. We don't get to see some of this hot, unexpected news happening pretty much every week. But that is the current scenario. That's the current landscape for 2025. And obviously, we need to understand a lot of this stuff here. It's very hard to avoid the news nowadays, especially in 2025, with how Trump is handling the US economy at this point in time. All right. Just a quick disclaimer, leverage trading involves risk and you should be trading responsibly. Obviously, regional restrictions apply. Terms and conditions does apply as well for educational purposes only, not financial advice, and past performance is not indicative of future results. Okay, there are going to be bonuses for participants as well. I'm going to show you the code to double your deposit bonus, and I believe it is a one-time use code, so make sure you save it up for when you want to deposit into your Octa trading account and use the code. And you should have access to the private Telegram channel as well if you registered through the website or have attended our previous news trading sessions. If you're new or you're watching this in the future and you're not watching it live, and you're an Octa client, contact Octa's customer service to put you in to the Telegram channel there to give you that access, okay? So this is the code. It's non-farm 2025. We still have a good 6.5 months to use the code. It expires on the 31st of December 2025. Again, the code is non-farm 2025. Save it up and use it when you are depositing into your Octa trading accounts. All right. Just a little bit about myself for those that haven't been to my sessions or are new here. My name is Vinay. You would call me a global macro strategist here. I'm also an institutional market analyst. My specialty is obviously in Ishimoku Kinko. I have over 20 years of experience. You want to be exact with that. It started in 2002 when I first got introduced into trading. And then full-time trading basically started in 2004. Why do I start? I start with the Forex market first, and then I spread out to all the other industries. Right now, I deal a lot more with the US equity side of things as well. And I was the former head technical analyst at GFT Markets, which is now Gain Capital, to work alongside Kathy Lien and Boris Schlossberg. If you're not familiar or if you're old enough to remember who they are, yeah. Anyway, I'm also the ex-head strategist for Invest Japan, which is designing structured macro playbooks, as well as technical FX strategies for Asia's advanced brokerage environment. We were actually... I think we were the first to kind of employ a pseudo AI environment there for our clients as well. So yeah, very familiar with the current landscape as well. Now I currently manage this multi-account family office, and a lot of questions has been asked about, am I handling a certain amount of money? Yeah, we actually have over 20 million of asset under management as well. Obviously, this is spread across different markets, not just Forex. Okay. Yeah, the rest is pretty much there. I've been invited as a panelist at Invest Fair in Singapore, which is in 2016, I believe. That was with Roger Montgomery as well as Mike Bellafiore. And also a regular market guest on BBC UK Channel News Asia, CNBC, Bloomberg, offering macroeconomic insights as well as tactical analysis to global audiences as well. All right, let's take a look at what we're going to be covering on tonight. And I wanted to discuss a little bit about the advantages and disadvantages of news trading. And let's talk about the advantages first. When it comes to news trading, we're not really dealing with fundamental analysis. So I just really want to make sure you understand, every month that we do this series sessions, that we are not dealing with a fundamental environment when news are released. Very closely related, and obviously it has a positive correlation to the macros and whatnot. But things like last week, for example, when we look at the NFP releases, we need to take a look at the initial news reaction. If we have to close a position, if we have to reverse a position, we reverse the position. And that's basically what we did last week as well during the NFP sessions. Now, it was a little bit different. We didn't quite do the straddle last week because the environment it just wasn't suitable for a straddle strategy. And we have to employ different strategies in the market as well. So yeah, reading what that news reaction is and the impact onto the fundamentals, very different, right? News trading, it's really short-term volatility. And the whole purpose of news trading, it's to exploit that short-term burst in the volatility in the market to our advantage, okay? The fundamentals are a little bit different. They're more, longer-term view, reflects what could potentially happen in the long run and stuff like that. The technical analysis, it's really to, short to medium term, and news trading is basically a completely different thing. So very different conditions here. Just, a lot of people assume that when you trade the news, you're really looking into fundamentals. You're not, and it's not required to have a solid fundamentals, a solid understanding of fundamental analysis to be able to trade news. It's good if over time you build that knowledge, that you understand the potential fundamentals there, but that's not really required, because when we do our sessions every single month, I gave you the fundamental context first in terms of the macro context. And if you want to know the macro context of what's going on in a week, we discuss that on the Outlook, typically like the one we publish every Monday here, okay? All right. Also, I can share with you the good news as well. If you're using the Octa apps, or if you're trading on the Octa platform, then you would have a place called Space. Right now, I do contribute into that space, and not just the weekly outlook, but any thoughts about the markets. If I saw something in the market and give you guys an update, it'll also be posted on the space as well. So just keep an eye out on those if you're not familiar with how it works, just to let you guys know, okay? All right, let's go into the advantages. We are looking at high volatility equaling to high reward, right? So what happens during major news releases is that it causes strong price movement, and this basically gives you multiple trading opportunities. A lot of people thought, hey, news just got released, if I don't act during the 1 minute, for example, then I missed out on the trade. No. And we showed you an example on how to handle, live trading last week. It's not always the case that we need to trade when the news is released. There are times when we need to just let the market cool off a little bit and slowly read the sentiments of the market. And that's basically what we did last week. So we want to look at news trading as this high volatility that creates multiple trading opportunities. Okay, so it's not to the point where, oh, the news was released, I missed it, and that's it. No. When the news was released, it typically caused a lot of volatility in the market. It gives you multiple trading opportunities, so you're never too late for that, okay? News trading, I would say, it's one of the most time-efficient strategy. All these trades are typically very short-lived, right? For example, last week's trade, that was actually one of our longest setup trades, right? We let the trades run throughout the night, but make sure that we don't cross over onto over the weekend, because a lot of stuff happened over the weekend. If you're not if you haven't been keeping up what's going on with what's going on in the world, you know, that's probably not a good idea. You should start looking at the news, or paying attention to what's going on. Just to give you a little bit of an update, there's a little bit of an unrest going on in LA at this point in time. It kind of spread out. It didn't start exactly in LA, but the situation now is obviously in LA. A lot of disputes between the Californian governor Newsom and Trump. Obviously, they have been in conflict in the past before, but what we're looking at, as the current situation developed, seems to be something that was more or less organized or architected by the Trump administration at this point in time, just to escalate things, to find reasons to kind of, deploy martial law. I would guess it's borderlining deploying a martial law when when Trump kind of just bypassed the state governor and approved a deployment of 2,000 National Guards. Obviously, when this happened, the last president that when this happened, it was in 1965. I believe 1965 means it was either Kennedy or Nixon. Should still be around Kennedy's at this point in time. But yeah, don't quote me on that. But the last time something like this happened, it was in 1965. But the context was very different. It was more of a serious nature back then, but what Trump is doing right now, I don't know. It sounds to me like pure racism at this point in time. But again, that's what we're looking at, and it seems like it's probably something that Trump would kind of take advantage of to create some noise in the market or in the world, right? All right, so very time efficient, also clear timing. When we talk about clear timing, we're talking about the scheduled releases, not this random unexpected news that happens with Trump here. For example, the NFP last week and the CPI on Wednesday, these are going to be our scheduled releases. When we talk about clear timing, we know when to be active in the market. Typically half an hour before the news gets released, we really want to start being prepared to open our positions. We want to start planning in that short period of time. And there's also that directional conviction as well, because news often aligns with the market consensus. This does reduce indecision in trend direction. If we take a look at last week's number, people are saying it was a good number. I wouldn't call it a good number, but we saw the initial reaction in the market. It was positive because people were pricing in for the worst case scenario. So that's probably why we're looking at that bit of gain there. But yeah, it does give you that directional conviction. It gives you that short-term burst towards a certain direction, and news trading is basically catalyst for the market, right? It's like the gunpowder for our trades. When there are no news, people are typically sidelined. We basically look for catalysts, right? No matter what you do, no matter what kind of analysis you're doing, for example, technical analysis or fundamental analysis, we still await this catalyst to jump into the market because news releases, they do create that volatility. It creates that short-term burst to take something out of a range, right? We typically look at the breakout scenarios happening during these news releases, and that's what we mean by directional conviction. All right, so news trading also works with both technical and fundamental strategies. So as I said, news trading is completely different from fundamental as well as technical analysis. Again, as I said, it was basically news releases are the gunpowder to start that chain reaction in the market. And typically a lot of the technical entries do happen around these news releases as well. So you can easily combine this news trading with smart money concept if you're looking at price actions, if you understand supply and demand, trend lines, then yeah, a lot of this stuff works there, even with indicators as well. if you're using Fibs, Ishimoku, stochastics, RSI, Bollinger Bands, a lot of these news releases become that catalyst for the technical, setups to be green lighted. Okay. So yeah, hi Breadcrumbs, and yeah, we did a fade. We technically didn't do a fade last week. We were actually kind of just waited for the initial move, and we actually didn't quite get the fade. But hey, it was a good move. We let the dust settle, and then we trade post data releases. So I think that was great. Now there are some disadvantages to niche trading as well. Because with high volatility, we're talking about a potential higher reward. This also means higher risk as well, right? And the first thing that we noticed was there are a lot of unpredictable spikes, right? We could get slippage, we could get a wider spread during these news releases. As liquidity dries up, we might not get into the position at the price that we want. So and the market does chop up and down as well, so it does create a lot of those unpredictable spikes in the market as well. It also requires precision in the entry itself. So entering even a few seconds too early or too late, this can result in poor fills or invalid signals. So this is something that we were carefully planning for last week. All right. We prefer to wait, and given the context of the market here, where we're dealing with low volumes in the market, and we just are not quite sure what the sentiment is in the market, the initial reaction. If we take a look at the data, we take a look at a breakdown of the data itself. It was more or less a very confusing data to break down. It took me over the weekend to actually break down and kind of pinpoint where are the potential pain points in the market. And with the employment numbers, there's actually a hidden factor behind that number there that would cause a lot of concern for future labor numbers, which is actually the huge sudden drop in migration labor force. Okay, so yeah, it does require precision. We need to time the market. There are times when we want to trade during the breakout, when the news was released. We use the straddles. We will use the buy stop and the sell stop orders. There are times when we want to use the limit orders, and there are times when we just want to wait for the dust to settle. Once the whipsaws are gone, we got a little bit of clearer conviction. So we actually wanted to come in a little bit later last Friday, but yeah, most of the time it does require that precision as well. So if you're not able to time it right, we might get in at really bad pricing in the market as well. There's also that whipsaw risk. So price may fake out in both directions before committing to a trend. Sometimes whipsaws and price doesn't go anywhere. And the past couple of months, we get no reactions in the market, and we choose to not force ourselves into a trade. So we do get that. It's a very simple rule. When we don't have any reaction in the market, there's no volatility, we just don't trade. We just move away. There's no point forcing ourselves into a trade when the market doesn't go anywhere. And previously, we would say it was beginner friendly, but just more of a warning here. It's really not beginner friendly because news trading on a higher level, right? It does require experience to handle the speed and volatility with discipline. So if this is your first month trading, I wouldn't say you should be trading news, but if you have been trading for more than 6 months, a year, then yeah, you should start trading news, but it's not beginner friendly because it does require a high degree of discipline when it comes to trading as well. Okay, so mentally you should be prepared, and this is the reason why I would now categorize this as not beginner friendly. If you're new here, you can catch up to speed by obviously looking at the past 3 years. Has it been 3 years or 2 years, 2.5 years that we have been doing news trading? So there's a lot of information. I believe at least you have 48 live trades that we have done in this channel here that you can look into it, and see how we do it during these releases. But yeah, review those videos. It will, kind of speed up a lot of experience there, but otherwise it does require a lot of experience to kind of handle the speed and volatility with high degree of discipline as well. Okay, so those are your what I would say the advantages and disadvantages of niche trading. Okay, now there are two types of market moving events. We have the hot unexpected news. These are unplanned events that often causes sharp market reactions. We might get terrorist attack, we get military conflict, we got natural disasters, we got that riot that goes on in LA right now, even though that hasn't spilled over into the market. But if things intensify, if things just escalate and Trump just kind of blow it out of proportion or kind of abuse the current situation, the concern that we have here, it's really more of Trump weaponizing the current situation there to kind of play into his immigration agenda, right? That would be the concern that we have here. At this point in time, I think it's still manageable. It hasn't spilled over into the market as of yet, but there's going to be a hot unexpected news. And to give you a case example, today the representative from the US and China are meeting up in London to talk about trade agreements. Assume would be considered into the hot news because we don't know when they're going to be finishing up with their deals. Are they going to take a day, or are they going to take 2 days, 3 days? We don't know. Today's the first day. We got to filter a lot of the stuff out, right? Because I know that how the US does things. They typically demand a lot of the stuff there. I think China is being a little bit more reasonable. And they're keeping it quiet until the deal is done, or at least some sort of agreement has been achieved. But with Trump, I think he'll start spouting things that are probably not true, or probably blow it out of proportion, and that would move the market in a short period of time. It might cause a lot of whipsaws in the market as well. So yeah, those would fall under the hot unexpected news, and depending on the situation, if it's really negative, then traders typically have a risk-off sentiment where they actually try to get rid of riskier assets like stocks, indices, and try to go into more of a safer options, or what we call the safe havens. That could be the gold, it could be bonds, it could be positive for the currency market as well. For example, we might see a little bit of a flow into the US dollar, or in this case, we might see a little bit of a flow into the euro and also into the Japanese yen. Okay. Now, obviously, as we mentioned, safe haven currencies strengthen while equities and risk assets typically fall during a negative sentiment. But if it's a positive sentiment, then traders are just going to pile on onto the riskier assets because they thought, hey, it is a safe environment for us. Okay. And then the other thing is, it's more of a scheduled periodic news. This is the one that we can hold on to at the very least in terms of when the releases are going to be, what the consensus are going to be as well. This includes central bank meetings, interest rate decisions like the ECB last Thursday, the RBA meeting minutes last Tuesday, and we also look at inflation indicators like the CPI, which is going to be on Wednesday, the PPI on Thursday. We got the quarterly GDP reports that we keep an eye out for. Employment data, labor data, unemployment rate, non-farm payroll, average hourly earnings. These are the stuff that we monitor as well. We also look at the ISM, manufacturing services PMI numbers, And this is scheduled, right? This will fall into the fundamental analysis, and we tally it up, we compare it to the previous month's data, get a little bit of an understanding into what could happen in the future. These are your scheduled periodic news, and these are the ones that we want to wait on for, okay? Okay. So here are some of the most profitable news events to trade. I like trading the inflation numbers, very important, but oftentimes it's not going to be that important. For example, with the current macro context, the FOMC is basically just going to stay away for a little bit until we get a clear understanding into what Trump could do with the tariff, whether it's legal or not. We'll have that findings from the Supreme Court. We would have an announcement from the Supreme Court whether what Trump is doing is legal or illegal at this point in time. But yeah, other than that, I like to trade the inflation number. It typically goes in one direction, all right? The NFP, it's very different, right? NFP typically move up or down, and then it reverses, and then it comes back to the initial reaction to the market, which is what we saw last week, okay? So there are different reactions to how this news releases. So you need to understand this. This is the reason why I say news trading, you have to have a little bit of an experience to understand the movement, because with the CPI, typically move very strongly in one direction. The NFP, it causes a little bit more of a spike in either direction before starting to move with the underlying trend, right? FOMC interest rate decisions there as well. Obviously, we are going to be looking at USD volatility. Equities and also bonds are going to whipsaw behind this, because bonds are tightly related to interest rate decisions in terms of how the yield works, and the pricing is inversely related to the yields. GDP reports, we need to take a look at the currency valuation adjustments as well. The manufacturing services index, then yeah, we get movement more on the FX side of things as well, as in indices, okay? All right, but yeah, nevertheless, these scheduled events, they tend to offer consistent volatility and opportunity. A little bit of a pro tip for you guys is that you want to combine scheduled news anticipation with technical confluence for high probability setup. So for example, if you're using the FIBs, you want to find out what's prices doing before the news is released. What's the initial reaction? What happens after the news is released? Does it break key levels? Does it break this support and resistance? Does it break a pivot, for example? We are looking for these confluences, right? And also in the direction of the movement, does it time well with the change in momentum, for example, if you're intraday trading, okay? All right, so to understand how it works, we basically want to look at the three main phases of price movement. We're not talking about uptrend, sideways, or downtrend. We would talk more about the phases or the development of the market before and after news is released, right? Typically, we have that accumulation where most informed, forward-thinking traders enter here. They start accumulating the positions. This is how smart money gather their positions. And then we have the participation phase, which is the breakout during the news release. These are where technical traders comes into the market, and then distribution happens when everyone else that is not there actively, they react a little bit late. They're using outdated information. This would be the distribution phase. Market might rally up very sharply in terms of the degree. But this is also the level where people that bought in low, for example, would start getting out of their positions. They would start booking their profits. So it might actually be short-lived. You might actually be buying at not a very optimal price. And this is the reason why we were waiting for us to take positions a little bit later, on last Friday. Okay. Okay. Some general rules for news trading as well. So before the news, you want to study the market context and understand the dynamics of the instruments. In this case, the currency pair that you plan to trade. For example, if you want to trade on the Aussie, do you understand that the Aussie doesn't really move in a range-bound market condition a lot? It spends 80% of its time in a range-bound market condition instead of a trending market. The euro, about 50-50 in terms of whether it's trending or ranging. The sterling typically trends a lot more. The yen typically trends a lot more, right? So you need to understand what you're dealing with. And also you need to understand the context of reaction of a certain instrument. For example, gold. We were never in a rush to trade gold during news releases. And if you sample the past live trading that we did, there are times when gold was triggered, but it just gets stuck. It doesn't go anywhere. It takes a while for it to start kicking off. And every instrument, every assets out there, it's going to react differently as well. So if you want to trade something, make sure you understand what you're trading and how it reacts to those news releases. So we would highly recommend that you review past reactions to similar news releases to identify these behavioral patterns. And as I said, you would have at the very least 48 live trades that we have on the channel. Because I'm pretty sure we have run live trades here more than 2 years at this point in time. So you would have 48 live trades that we did at the very least. And it's always good to review these videos, review the reactions that happen in the market when prices, meeting up the consensus, when there's a surprise to the upside, there's a surprise to the downside. How does the market react, right? And if you're able to review these past reactions, that's where you can identify these behavioral patterns, because our job as an analyst, especially one that trades around technical analysis, we rely a lot more on what happens, how the market reacts in the past to give us a little bit of a glimpse into how it would react in the future as well. We deal with probability, we look at patterns that has happened before. So behavioral patterns, very important. So I highly suggest that you review past reactions as well. Okay. Also, mark key support and resistance levels on your chart to anticipate potential breakout or reversal zones. Also define your strategy here, whether you're trading the new spike or are you going to be fading the reaction, or are we going to be waiting until both of them are gone, for example, like what we did last Friday, okay? All right. So a little bit of an execution plan that you should have as well. You need to set your trading time frame. Are you going to be scalping the market? If you're doing that, then you should be doing it down to 1 to 5 minutes. If you're keeping a position on the intraday scale, do that on a 50 minutes to 30-minute time frame. And if you do swing, you look at 1 hour, 4 hour, even daily time frame. So make sure you understand the context of what you're dealing with and for what purpose. You also want to control your risk as well. You want to determine the maximum acceptable loss per trade and then apply the proper position sizing. You also want to use stop loss. You could also use trading stop for protection in high volatility conditions like last Friday, for example. I say if the market starts moving in our favor, especially in gold, move your stop loss to break even. That would minimize a lot of the risk that we have on that gold trade, because last week's gold trade, I believe the initial stop loss was $15, which is a lot. If you're not familiar with what $15 is, I believe $15 is actually 1,500 points if we go with pips in the gold market, right? So also decide whether the trades are going to be short term, are they going to be help post news. That's basically what we did. We held it longer than an hour, but we had a plan. We don't want to hold it over the weekend because we don't know what randomness that could happen with Trump at the helm at this point in time. All right. Okay. So we've got about 20 minutes. Let's go into the strategies here. And I want to go very quickly into what the pending orders that we want to cover on tonight. We've got a buy stop, we've got a sell stop, we've got a sell limit, we've got the buy limit. So what are these? Let's talk about the buy stop here. And the use case here is that you expect price to break above resistance and continue rising. And your strategic intent here is that you want to enter on that momentum breakout, which is a trend continuation, right? If you are familiar with the price action, that would mean a break of structure, that would be the best use case scenario. We're looking at a continued movement. We're looking at break of structure. That's where we want to use the buy stop, right? Change of character, we don't really want to use the buy stop yet because it's really not a strong confirmation to go in that one direction there. Okay. So to give you an example, if price breaks above 1.10 on the euro, you want to buy at 1.1005, for example, expecting further upside, then yeah, use the buy stop. Sell stop is that you expect price to break below support and continue falling, and the intent here is that you want to enter on a downside breakout, which is the opposite of the buy stop. Now the sell limit here is that it's a little bit different. If you take a look at the picture there, obviously the buy stop and the sell stop is something that breaks through and continues in that direction. Sell limit and buy limit is when price hits a resistance or support and it kind of just bounces off those support and resistance. That's where we want to use the sell stop, okay? So, sell limit and the buy limit. So let me give you a little bit of an example here on the sell limit. If you expect price to retrace upward into a resistance and then reverse, that's when you want to use the sell limit, because the intent here is that you want to catch a pullback before the bigger downward move, okay? So for example, price is rising towards a known resistance, you set that sell limit just below it or above it, you know, just when it hits there or spikes there, you know, your positions are going to be open and you are going to be entering a sell at a much higher price, which is the better positions. The buy limit is the opposite. If you expect price to pull back into support and then bounce upward, for example, like last week when we talked about the sterling, on the outlook there, we were looking at support and then price bouncing off the support, and yeah, we would use the buy limit level, strategy here. Is that the intent is basically entering at a discount during when price retraces, but you believe that the uptrend is still going to continue, then you use a buy limit, okay? So very simple. All right, so pro tip, the stops and the limits. You know, if I can change the wording, I would say, yeah, you know, buy stops and sell stop, we should say buy or sell breakout continuation, right? Limits, I would say buy or sell a reversal or a bounce. You know, that's basically the wording that we would get to take away from this pending orders, okay? All right, so let's take a look at an example of a straddle. This is about 80, I would say 80%. I think statistically, I actually kept a record every time we did our live trade, and I believe the last computation that I have from my worksheet was about 80%. We use the straddle strategy here, okay? But to use the straddle strategy, we need to have a consolidation phase. We need to have that accumulation phase. Otherwise, we're not able to create a room for us to trade the buy stop and the sell stop, because we need that corridor of volatility. But yeah, if the market moves in a range bound market condition like so, then you want to trap the market there. You want to create an order above the ceiling. You want to create an order also below the floor, right? So when the market breaks with conviction, we are in that trade, and you know, we see this, for example, it spikes up, but we already have a pending order in there. So in this case, it breaks to the upside. The buy stop was triggered. We need to cancel the other order. Otherwise, if it whipsaws, then we're just going to be negatively hedged, which is not a good idea. Okay, so yeah. Once the breakout happens, you're in the trade, and also it's always ideal, you know, if you get out very quickly, or if you want to hang on to your positions, you move your stop loss to break even. This would minimize the risk. In fact, it will actually turn it into what we would say a risk-free trade. But yeah, you kind of need to time it and make sure you get the initial direction correct. Otherwise, you know, you could be opening up in the wrong position and you're not really able to turn into risk-free zone. And that's also why we always need to have a stop loss in place. Otherwise, it would be really risky if we trade without stop losses here, okay? All right, let me give you a little bit of an example here on what we could do. So this would be on the, I would go with the euro, right? And if I were to look at the euro here, do we have that consolidation happening here? We don't have that, so I'm gonna go through all the other stuff. The sterling also not, but I think with the euro and the sterling, we're probably looking at a little bit more of a limit example here. With the dollar yen, we're also not looking at that, but with gold, I think there's a little bit of a accumulation that happens today here. So gold traders, we might see a little bit of a breakout happening here, but there are no news releases today, so it is a very quiet market. If you don't know, the European market is actually closed. The Australian market is closed for different reasons. With Mondays for the European market, and also for the Australian market, it's actually the King's birthday. It used to be called the Queen's birthday, but yeah, we have a king instead of a queen right now. So yeah, does this work with the trend line, for example, in this one? Yeah, it does work with the trend line. So we can actually use a stop order on this one here, because if it goes up above the range that we have here, the yellow out range here, then we might actually see a breakout continuation. So we could use a buy stop here above that, and if it fails to break above that resistance trend line, price might actually fall down. So this is actually set up for a good straddle here on gold here, right? So we could have the buy stop and the sell stop here. The idea is that, yeah, if it goes out of the range, break through the resistances, then it might actually start rallying up really quickly. But if it fails this trend line here and it breaks the range to the downside, then we might actually go a little bit lower. But you know, to the downside, we actually do have a little bit of a support building up there, about 3,300 on gold there as well. Okay, so we could do that on gold, for example. I think this would be more applicable. So, okay, so we don't know what's going on, and assuming the next 15 minutes or next 5 minutes, news is going to get released, I might break out of the range there. It will trigger one or the other, and that's the trade that you keep, right? For example, if the buy order is hit, then you want to immediately cancel the sell stop, okay? So you only want to go with one trades here, okay? All right, let's go back to the slides here, because I want to talk about the limit strategies here today. I think there's a lot of examples that we can use the limit strategies. Again, if you take a look at the example here, we got that order block there, that red area that was an order block. You know, a lot of people would say that was a resistance zone. Doesn't matter what you want to call it. But yeah, that was a resistance up there, and we expect market to potentially test that resistance one more time, and then if it fails, then it would drop off very quickly. This would put us in a position where it might seem that we're doing a little bit of a counter trend strategy, but it's not, right? The risk reward balances out. So let me go back to the buy stop and the sell stop here. The risk reward ratio here, you're looking at a much bigger risk here. But if we're with the limit strategy, because we're selling or we're buying very close to that key levels there, our stop loss is not really far away. So for example here, you can take a look at the stop loss there, the sell limit there. The stop loss is very small. And comparing the risk reward ratio to a buy stop or sell stop strategy, the limit strategy here, you're at the minimum, you're looking at 1 to 2, 1 to 3 risk reward ratio for that trade. With the sell stop strategy and the buy stop strategy, you might be looking at 1 to 1, 1 to 2 risk reward ratio, but it's very rare that we get 1 to 3 risk reward ratio. But with the limit strategy, yeah, minimum you're going to be looking at 1 to 2 risk reward ratio. A lot of the times, in all honesty, I'm actually looking at 1 to 4, 1 to 5 risk reward ratio. So the risk is worth it. Your risk is actually very, very small when it comes to the buy limit and the sell limit strategy. So let me give you an example here. A couple of trades that we were kind of looking out for example, here on the euro, right? So if we were to zoom out a little bit on the euro, we can see how strong that uptrend is. In fact, there was a little bit of a new support trend line that we have here that might actually work in the market. But really want to look at this and say, okay, look, this was the arrow last week, and we didn't break below that level there. This was on the back of the NFP releases, right? In fact, market kind of bounces up and creates a higher high. So if we take a look at the current scenario, we might be looking at this and say, okay, let's figure out what's going on here. Is there something that we are missing here, or what? There are a couple of areas, obviously, that we would classify as a potential order blocks here, but I think the nearest one would actually be this order blocks there. So price might come down a little bit. It might test a new low, but if we take a look at this on the hourly time frame and how important the psychological levels are, we are now at 1.14. In fact, we are at that level now where we might actually be looking for a potential support to come into the market. So we can draw two trend lines that we have here. Number one is obviously this one here. So yeah, that would actually be the trend line that we want to focus on. And if I were to jump in on the 50-minute time frame, you can look at how price is quickly now approaching this trend line there. So if we look at that trend line, can we create a new limit? Yeah, I would say so, because we're at about 1.14, and the logic behind this is that I really look at the euro as that has the potential to go. I might be wrong, but if we take a look at what we have here, we got a support trend line, we got a flat support trend line, support level there, which is a horizontal support level. Then I might be looking at this and say, okay, what if price maybe kind of spiked down a little bit below the trend line, and then all of a sudden it jumps up? We could look at that scenario. So I would say, yeah, it's probably a good idea to have a buy limit. So when price gets down there, it'll hit a buy limit, and then it might push up, right? And obviously, you want to set it up in a way where, okay, I think I lost it. Do I lost it? No. Hold on, let me see. Yeah. So for example, I do want to have a buy limit there, and we want to modify our stop loss, for example. Here we don't really want to go any lower than that level there. That would be our stop loss. And also in terms of our take profit, we can go for this high here, which is the recent high, the intraday high on the euro. That would give us a risk reward ratio of 1 to 2, right? But we can also go for this block here, or maybe this order block up top there. I think a lot of traders are probably going to go for the one up here, which is about closer to 1.15. And if you take a look at the distance between the risk reward here, it just makes sense, right? You're looking at close to 100 pips for potential reward. And what are you risking? You're risking 25 pips. This is a 1 to 4 risk reward ratio. It makes a lot of sense, right? The sterling here also, if we take a look at the sterling here, I think this is all old trend lines here. But yeah, obviously we have a very strong support building up around this area here. So we can actually look at the spikes that happen around this area here. That's not going to be a strong support. That's about 1.35. So the logic behind this, if I were to look at that, what if price comes down tonight and it hits 1.35, and then it lifts off back to 1.36. So I could have a buy limit at 1.35, for example, here, right? And my stop loss would be below this swing low here, and my potential target could be this high. It could be that high. If we take a look at the risk reward ratio, it makes a lot of sense, right? Because now this is how much I'm risking. It's very small. It's just this area there. But the potential gain that we are looking at, it's this big or this big. We're looking at a risk reward ratio of 1 to 4 at the very least now, and a potential of even 1 to 8 in terms of risk reward ratio. So this is the limit strategy. It really is a tool that could give you that risk management control. So obviously these are strategies used in different market conditions, but yeah, there are times and places where we use these limit strategies, or when we use the stop strategies, or we might actually trade after the news is released manually, like last week. We can do that as well. Okay. All right. All All right, just a quick test for you guys to make sure you're ready for news trading. Number one, let me give you an example, a quick test. If you see a surprise rate hike from the Fed, the inflation number goes really high next Wednesday, and then Fed calls on an emergency meeting and they start announcing, okay, we're going to hike 25 basis points, 50 basis points. Now, if that happens, which assets are likely to spike, and then what would you avoid trading? Okay, that would be question number one. And the second example would be the NFP reports is due in 10 minutes. What kind of pending orders would you place? What would you use for the NFP in the usual use case scenario? And what if price breaks below a support level right after that CPI is released? Would you use a sell stop or would you use a sell limit? And give me a reason why. Okay. And also for the last question, if you can name me all four type of pending orders that we have, understand from this session and then match them to their most ideal new scenarios, that would be a great thing as well. Okay. So I'm going to give you guys about 1 minute to answer that, and I'll be back after 1 minute, okay? Okay, not getting a lot of answers, but just to give you guys a little bit of scenario, Albert is giving an answer right now. I would avoid stock and might start short selling the pound and the euro. Yeah, I would do that too because the surprise rate hike from the Fed obviously depends on the situation, but typically it does benefit the US dollar a lot more if they hike. Okay. Okay, and if the NFP report is due in 10 minutes, what kind of pending orders would we place? We would do, yeah, Albert is answering that. Stop order, hoping that a range of volatility happens. And we see that breakout scenario when the news is released. The stop orders are what we would typically use during news releases as well. Now, the third question is actually a little bit of a trick question here. If price breaks below a major support level right after CPI release, do I use a sell stop or do I use a sell limit? Well, the answer to that is actually very clear. We're not able to use the sell stop because we already broke that major support level. But we will use the sell limit. Why? Because we might get that correction back to the previously broken support level to be tested as a resistance, and that would be the time to use a sell limit, okay? For the bonus round, obviously, we talk about 4 pending orders, stop orders, that we've got a buy stop and a sell stop orders, we've got a buy limit and a sell limit orders, okay? And match them to their most ideal new scenario. We would use the stop orders for when we have a range bound market condition before news is released. And we would use the limit order when during news releases, it breaks through a key support and resistance area, and then we let the dust settle. We expect market to come back and test those broken support and resistance. And if it has been tested and it is a valid retest, then yeah, the most ideal scenario is actually to use the limit orders instead of using the stop orders. Okay. All right, we're doing a theory sessions here, so we're not doing live market analysis. I believe other speakers are going to be doing live trading sessions with you guys throughout the week. So feel free to ask them there and then. We just don't have the time to do this during this theory sessions, okay? We actually had the opportunity to do that, Nicholas, if you say that maybe 15 minutes ago when we were using that example, I might actually look at some of the examples there. But yeah, since we only have about 1 to 2 minutes left, we're unfortunately unable to do that for you. So tune into the live trading sessions. They should be able to give you that analysis there, okay? All right, so the code is non-farm 2025. I keep forgetting to change the slides here. No, the code is non-farm 2025. It expires on the 31st of December 2025. Yeah, I think we have time for Q&A sessions, so we need to wrap things up. What's next? We are going to be live trading the inflation numbers. That's going to be on Wednesday. We will cover some theory first as well. We'll talk about what inflation rate is, what we're looking at the CPI, what we're looking at the core CPI. But yes, we will use the remainder of the time there to trade the market live. We will do our setups there. We'll do our analysis about 5 minutes before the news is released. We'll set up our trades, and then we'll monitor the news release, and we will trade live during the CPI release on Wednesday. That would be on Wednesday, the 11th of June. Same time, same place, same channel. Just click subscribe and click on that notification icon so you don't miss the session. Okay. All right. Before that, as I said, it's always good to review past behavioral patterns. And as I said, we have been doing this for more than 2 years. So at the very least, you would have 48 live trades that you can use to start looking at patterns that has happened in the past, how we handle those live trades every single month for the past 2 years there. So yeah, it's safe there in the library. It doesn't get deleted. So whatever I say, whatever I do, there's actually a record of that in the recordings. Okay. So good luck to your trades for tonight and tomorrow. I'll see you guys on Wednesday. Stay safe. Good luck to your trades. I'll see you very soon.